please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A tech unicorn, the first of its kind in Southeast Asia to list in New York. But how will it tackle the intense competition in the region? This week on Managing Asia, I talked to Nick Nash, Group President of Singapore-based internet company Sea. It grabbed attention last October. Sea, short for Southeast Asia, became the first startup from this part of the world to list on the New York Stock Exchange. I met Group President Nick Nash to find out what it was like to travel from Singapore to Wall Street.
It was an extraordinary moment, and I'm sure you'll be able to find some footage of that crazy experience when you're there at the podium, ringing the bell.
All the hard work pay off.
All the hard work pays off, but a new chapter begins.
The company began life as Garena in 2009. An online gaming distributor of popular titles like League of Legends and FIFA Online 3. In 2014, its elusive boss, Forrest Lee, brought in fellow Stanford classmate Nash to help run the show.
I was just about to go back to New York on my next assignment for General Atlantic, and Forrest asked me, do you really want to work in a 1 to 2% GDP growth region, as opposed to greater Southeast Asia, which has 5, 6%, even 8% in a good year? The second thing he said is, do you want to do something that your children are going to be proud of one day?
So you said yes immediately.
Well, there was a third point, though. The third point was, very interestingly, what kind of organization do you want to be in? And he pulled out for me something that we now call the Sea Manifesto. And it's sort of a constitutional document. It's a code of conduct for the entire organization. It has 5 basic principles, one of which is we always stay humble. And I had never heard of an organization before where one of the core axioms of behavior was not just being humble, but staying humble, beginning humble, continuing humble, and always remaining humble.
This tech unicorn, backed by China's Tencent, has one of the sleekest offices we've seen. From its designer reception that rivals multinationals to startup facilities that include sleeping pods. Well, Garena started with gaming, we know, in 2009, then went into the e-payment space with AirPay, and then when you came along as group president, you went into e-commerce with Shopee. Are you trying to be the Tencent of Southeast Asia?
I think we are trying to be the defining internet platform for greater Southeast Asia. And that has elements of Tencent, yes, because if you think about where market capitalization is in the world, particularly emerging markets, internet, there's really 3 big clumps. Tencent is a $400 billion plus market cap company, largely around content and specifically games. Alibaba is comparable in size, largely around marketplace e-commerce. And in the future, perhaps some combination of Tenpay and Alipay will be valued in the hundreds of billions of dollars as well. So if you think of there as being 3 food groups, games, e-commerce, and payments, we felt that we had to be in all 3.
So you are trying to be the Tencent of Southeast Asia?
I think in some ways we're trying to be a synthesis of Tencent, Alibaba, and the payments businesses that both have built. In some ways, call us the Peranakan Tencent and the Peranakan Alibaba.
Sea is backed by Chinese investor Tencent Holdings with a almost 30% stake. What's it like to have such a powerful Chinese investor behind the company?
Well, it's funny. I mean, although Tencent is born in China, or was born in China, it's a very global company in terms of its talent base. Martin Lau, its group president, was a very promising and well-regarded executive at Goldman Sachs. The head of strategy, James Mitchell, likewise comes from Goldman Sachs. So I've never met actually an Asian company with as global an experience base and mindset as Tencent. Tencent's allure to us isn't the fact that it's a Chinese company, isn't even the fact that it's an internet company. It's the fact that it's, I think, the best managed company in Asia. I think we will look back 15 or 20 years from now and think of Tencent circa 2017-18 as kind of the way we thought about GE under Jack Welch, or even maybe in the early Eisner years, Disney, as it was growing so quickly. That's the beauty of having Tencent. It's the judgment, the acumen, the mentorship. Tencent sits on our board. They're never more than a WeChat away from a quick message or a question.
So what are some of the valuable lessons you've learned from Tencent and their journey?
The single most valuable lesson will sound very simple. And the applicability of the lesson isn't in being taught it, it's in adhering to it, like all important things in life. It's a user focus. Tencent has always focused on their users. If they focus on their users, financial outcomes are a byproduct. They're a report card of how well the user experience is. Market cap, equity value for the employees and the shareholders is a byproduct of that. Tencent has always told us from the very beginning, put the user first.
I'm sorry, he's the mastermind?
After its milestone listing, Nash says this is just the beginning.
The IPO, first of all, wasn't an exit for anybody. Not a single shareholder sold shares in the IPO, whether internal or third-party financial shareholders. And moreover, the IPO really, in some ways, marks the rechristening of the business from Garena to Sea and the broader ambitions we have. What fun would life be if everything was done and over? When Francis Fukuyama said that we'd reached the end of history in the 90s, thank goodness he was wrong. History continues and evolves. Our company's history is just beginning. It happens.
But in a sea full of other big fish, does it have what it takes to swim ahead of the others? Competition has been brutal in the e-commerce space. Here in Southeast Asia, you have to compete with players like Lazada, Q10, Amazon. You've increased your marketing spend, at your shopping unit, Shopee, but it's led to wider overall losses for the company with no big improvement in revenue growth. Are you prepared to burn more cash, or are you rethinking your strategy?
We never burn cash, Christine. We invest it. So let me draw out the unit economics of Shopee, then you be the judge. It costs us about $4 to $8 to acquire a first-time buyer on Shopee. And that buyer, or active buyers, tend to buy about 3.6 times a month. And the average basket size in the last quarter was about $16. So $4 to $8 up front, the customer spending $60 per month, and marketplace e-commerce typically has, for players like eBay and others around the world, 8 to 12% take rates on the GMV. We're ramping that up slowly. We'll get there eventually. So do the math. If you have just let's call the midpoint, a 10% take rate on $60 of GMV per month, you're getting paid $6 of revenue, but you paid about $6 to acquire the customer. So you're getting paid back in about a month, maybe 2 months. So with unit economics like that, we feel very comfortable and our shareholders feel very enthusiastic about leaning into the business. This is exactly how Alibaba builds its business.
So are you continuing to increase your marketing spend?
We're continuing to increase it in absolute terms, but if you look at it in proportional terms to the size of the business, it's fallen. In the first half of 2016, we spent about 15% of our GMV for Shopee on sales and marketing. In the first half of 2017, a year later, we spent less than 7%. So in proportional terms, it's declining. We chose to spend a little bit more in Q3.
But overall, in the long term, are you sure this marketing spend is going to eventually pay off in a big way?
We are very, very certain that with the unit economics I've described, $4 to $8 up front, $60 a month of spending, and a very good retention of those customers month by month by month, the math makes sense.
And you're confident you have what it takes to be the #1 player in Southeast Asia in e-commerce?
Well, I think if humility is our core virtue, we certainly shouldn't describe it that way. But I would say that we're confident that our customers are happy.
Your biggest rival is Lazada, backed by Alibaba. You have what it takes to take them on?
I think we are doing things quite differently, and the results paint a positive story. Let me start by saying we deeply respect them. Lazada was the pioneer of e-commerce in Southeast Asia. They're not in Taiwan the way we are, but they're in Southeast Asia. And we've hired some people from them over the years. We've learned from them. And in much the same way that America Online kind of prepared America for eventually Google, Amazon, Facebook, Uber, whatever, Twitter, I think Lazada has really prepared Southeast Asia. And Lazada will always thrive as a great business, but their heritage is what's called 1P, which is that inventory model. They've diversified over time. And today, still, they're very male-dominated. So ask me this, or let me ask you this. When was the last time, Christine, you went to Harvey Norman here in Singapore to buy lipstick? Or have you ever gone to Quartz to buy a dress? Does your daughter shop for clothing at, let's say, a Fortress in Hong Kong? That's the point. Retail segments between sort of male SKU retailers and more female, broader SKU retailers. And we've chosen the latter path.
So you're going down a female path with Shopee?
We have, and we've done that from the very beginning. It wasn't something we sort of lurched into. From the very beginning, we recognized if we're up against the most well-capitalized companies in the world, like Alibaba, We have to do things a little
So
differently.
this focus on the female shopper, is it going to make Shopee profitable soon?
I think it will, and it
How
will.
long will it take?
Well, as a public company, we should be a little reluctant or a little shy about forecasting
Well, we
numbers
are in a
specifically.
new financial year, 2018. Could it happen this year?
Well, let me say this. The analyst community has forecasted that Shopee gets to break even sometime around 2021. And what we've communicated verbally to folks is that it felt to us probably a year or two pessimistic. So we're here in 18. Let's say 2020, 21. That sort of zone is a nice place to be. That's not too far up.
Stay with us. More with Nick Nash, Group President of C, in just a moment.
Payments is a low barrier to entry business, as you point out correctly, Christine, but a very high barrier to success business.
So is it ultimately a war between Tencent and Alibaba for Southeast Asia? In the e-payment space, there are growing concerns about saturation. Not only do you have to compete with banks who are also offering online payments, you also have to compete with the likes of GrabPay, Alipay, and other new players because it doesn't take much to set up a e-payment company. What are you doing to build up AirPay's network here in Southeast Asia?
I think there are two great points to make about payments, and that influences strategy. Point number one is that payments isn't a business. It was a business over the last 3 or 4 decades with the duopolies of Visa, MasterCard, and then the challenger of Amex, and then country by country, the China Union Pays and the JCBs and what have you around the world. But actually, payments is one of those great industries that's finally getting deflationary pricing. Payments is finally becoming cheap. And with payments becoming cheap, what becomes much more important is what you pay for, as opposed to the payment company getting a margin. So principle number one, the business planning of yesteryear, which is that payments could be a quasi-oligopolistic business with high rents in terms of the merchant discount rate, that's gone. Mm-hmm. The second very important point is that payments is a low barrier to entry business, as you point out correctly, Christine, but a very high barrier to success business. And the implication of that is that in a scale-oriented business, enterprise like payments, whoever has the use cases wins in payments. Although it's a Pyrrhic victory to a certain extent because you're not making a lot of money, but there are other strategic benefits. So look at China. The two biggest payments companies in China, other than China Union Pay, which is a creation of the banks and the state enterprises, are TenPay, WeChat Pay, and Alipay.
So with AirPay, are you profitable?
We are at the gross margin level, but we intend to grow the business as a utility. So we think of payments, again, point one, not really per se as a massive profit maker, but as something whose cost should be lowered to make the things you pay for easier. Keep in mind, we make most of our money today in our games platform.
Sure.
Over time, we'll make a very good amount of money, we hope, in our e-commerce business. Just lowering our cost of being paid is itself a source of profitability for us. And then over time, the beauty of owning a payments platform is in the convenience for the user, the stickiness, and over time, the financial products you can sell.
So what are you doing to widen your payment offering?
Well, the opportunity is in digitizing cash. Taking cash and making it something electronically fungible that you can pay for does two things. One is it lets you pay for things beyond an arm radius, which leads to price transparency and convenience. It also leads to money velocity in the economy. It's good for economies to have a greater money flow. So a big part of AirPay was what we've now called our AirPay counters. It's 180,000 locations across this region, typically mom and pop stores, little tiny convenience stores. They aren't even branded, it's small little stores. You walk up, Christine, you give them 20 baht, let's just say, and in 5 milliseconds, it's in your wallet in Thailand. That's really cool. That was our first secret weapon. The second secret weapon now is sort of phase 2 of AirPay, having Garena as the #1 market share games business and having Shopee as the #1 market share by orders, and in our region of overall Greater Southeast Asia GMV, e-commerce business.
Did you say Greater Southeast Asia?
I did. So we think of it as two regions. There's Southeast Asia, which is what people would sort of call ASEAN.
Yes.
And that's sort of the big six over here, Singapore, Malaysia, Indonesia, and so on. And then we've also chosen to include Taiwan in our business, and to sort of give it the respect it deserves, we call it Greater Southeast Asia. Now, there's a bit of a parlor game as to whose market share is bigger depending on how you look at it. Let me just set the record straight. By GMV, we are the largest e-commerce platform in terms of overall Greater Southeast Asia, but we're #2 if you just look at the Southeast Asia piece, because Lazada doesn't have a Taiwan operation. Now, by orders, which is a little different than GMV, because sometimes you can have a big order or a small order, we're #1 in ASEAN, and we're #1 on the overall basis as well.
C is backed by Tencent. while Lazada is backed by Alibaba. So is it ultimately a war between Tencent and Alibaba for Southeast Asia? I'm sure you've been asked this many times.
I'm sure Henry Kissinger would enjoy thinking about a new Cold War forming, but it's not really as facile as that. A lot of these things happen in a serendipitous way. For example, Tencent owns, on a fully diluted basis, just under 30% of our business, diluting for the CB. But in terms of the quantum of capital we've raised, Tencent has given us less than 15% of the total capital we've raised over the years. We've raised a bit more than $2 billion, and a bit less than 15% of that has come from Tencent. So we're actually as proud of the other 85%, which are some of the leading families of this region, some of the largest institutional money management firms that were in the IPO and so forth. But I think what is happening is, as China reaches a point of, I wouldn't call it saturation, but I would call it beginning of the end game.
So Southeast Asia is the next big battleground?
Possible, but I think it's less that it's a battleground. I think it's just more global opportunity. And it's interesting to think about it, Christine. What stopped the American firms, the German firms, the Japanese firms from being here? Nothing. In fact, eBay has been in Southeast Asia for 15 years plus. Rakuten tried Southeast Asia, chose to sort of focus more on Taiwan over time. In some ways, the narrative of the new battleground is actually less about that and more that finally it's China's turn to take a swipe at Southeast Asia.
Don't go away, coming up next.
One of the secrets in our business was no VC. You'd be surprised, the least successful capital raisers over the long term, there may be small successes here and there, are the salesy companies.
Forrest Li is the CEO and founder of Garena, now known as C. How closely do you work with him to run the company, and what role do you exactly play?
We are separated by 2 inches of drywall.
2 inches, you've counted, to be exact.
Give or take. We're right next to each other, within shouting radius of each other, and that's really great. I mean, Forrest and I, let me take a step back. We were business school classmates. We took a class together at Stanford, and Forrest and I couldn't have come from more different backgrounds. He was one of only 4 students from all of mainland China to get into Stanford Business School his year. I was probably one of a dozen students from New York City to get into Stanford. So he clearly is smarter than I am in terms of the odds he had to go up against. And that shared background, that shared DNA coming out of Stanford is a really entrepreneurial business school as far as these things go.
So he's the brains behind the business.
I think it's a collective brain. In some ways, it's very hive-like.
He's also very elusive. Did he hire you to be the front person so he doesn't have to appear in front of people like me?
I don't think so. He does media interviews from time to time, but I don't think elusive is the right word. I think the right word is focus. In many ways, we take a cue and inspiration from Tencent, where Pony Ma has such a religious focus on the user experience, the customer, the product, the people, the culture. Those are things that Forrest wakes up at 5 a.m. thinking about. Those are his area of focus. And to a certain extent, I think we've come to realize that the role of a company leadership team is polyglot. Christine, you were a sociologist by training, and when you were getting your master's, you learned about Weber's theory of leadership. And there were sort of the 3 different models, the legal model, the traditional model, and the charismatic model. And I think as a community, and certainly as a media and a tech industry, we've sort of gotten overly enamored of the charismatic CEO. The CEO who is simultaneously number cruncher, charismatic speaker, capital raiser, product visionary, hirer, recruiter extraordinaire. Sometimes those are different roles. And sometimes being a jack of all trades does make you a master of none. So again, back to Tencent, Pony focuses on what he focuses on. Martin focuses on capital and partnerships and business development and many different other tasks.
So there are clearly divided roles between you and Forrest.
Clearly divided roles, but very, very close coordination. The beauty of being a technology company is that we build our own tools for coordination. We have a mobile messaging platform we use internally, which means we're never more than a few minutes away from each other.
Let's talk about investors, because the company has been successful pulling in great investors like China's Tencent Holdings, Malaysia's sovereign wealth fund Khazanah. What's the secret to capital raising?
One of the secrets in our business was no VC.
Why no VC?
Well, it's interesting, and maybe
Too short term?
Possibly. At the end of the day, I think we always thought of the business in 10 to 15-year planning cycles.
Sure.
And the traditional VC, as much as they try to predict the future, does think about a 4 to 6 year exit. Private equity firms are a notch better, but the best investors, we think, are families.
So what's the secret to capital raising?
boy, I think the secret to capital raising
Is it about laying out a great vision?
I think it's about being honest and humble. You'd be surprised, the least successful capital raisers over the long term, there may be small successes here or there, are the salesy companies, you know, where you're sort of overstating the case and you're drawing out these reality distortion fields, as they used to call them. No, we try to tell people what's going right, what's going wrong, what our dreams are, what our mission is, how we hire, where we see the opportunity. And then we ask them to make a decision that they feel most comfortable with. But we do try to share with them our passion for the business. And if they like it, great. And if they don't, that's okay too.
Let's talk about you, Nick. Prior to Garena, you worked with General Atlantic,
Yes.
a private equity firm. You started the ASEAN office, which led to the investment in Garena. And then you were a consultant before that as well at McKinsey.
Yes.
How would you describe your leadership and your management style? What is Nick Nash like?
Oh, boring. Incredibly boring. No, nowhere near as interesting as all the other people you interview. You've interviewed the best, Christine.
You're being humble.
I'm just a simple bloke that happened to have an extraordinary opportunity to build something with a bunch of friends. It's as simple as
What kind of leader do you want to be in this company?
I want to be a leader that's known not for what he did, but for what the people he hired and mentored did. The thing that makes me happiest in this company is seeing people that I've hired and grown promoted. I think at the end of the day, thinking of leadership less as, again, a Weberian authoritarian model,
Sure.
but more of teaching, inspiring, coaching, mentoring. These are overused words, but the leader as teacher, the leader as guide is a very underused style. I love that style.
Let's talk more about that because you're in charge of more than 5,000 employees. How exactly do you manage talent and pull in good people to work for you?
Well, it's very interesting. So let's divide it maybe into different elements that all come together. One is the identification of that talent. One is the interviewing and sort of evaluation. Then finally, it's the retention. Identification, you'd be surprised how many low-hanging fruit, to use the cliche, opportunities there are here in Southeast Asia. Hiring more women. The tech industry is infamous for not hiring enough women. Here in Singapore, about 40% of our staff is female, and that's still not good enough. It should be 50.000. Evaluation. Almost everybody we hire goes through some sort of exam or case study. And I don't mean this in sort of a stupid sense, like in a superficial sense, but giving them a flavor for what the work will actually involve, having them produce a written product or do a coding exam, or in my group, I put people through a 6-hour process. It's such a difficult process that at one point I was interviewing someone, and 2 hours into the case study, he got up and said to our HR person, "I'm taking the job at the Sovereign Wealth Fund," and walked out. That's pretty good. I'm glad he made that decision.
Okay, so that's not the person you want to hire.
Probably not. I hope that Sovereign Wealth Fund is enjoying that person now. Didn't have the stamina to go through a multi-hour case study. No, we pay very well. It's that the work is hard. The work is hard. Finally, retention of people. The old saying is always true. People join a company because of the brand and they leave because they had a tiff with their boss. We try to avoid that. A lot of coaching. And startup life is full of lots of little tiny mistakes, not the least of which are the interpersonal mistakes, the misunderstandings, the awkward conversations that happen. We try as best we can to minimize them.
And finally, you work closely with Forrest Lee, the CEO, to run the company. What's the ultimate vision for C? What exciting things can we expect to see from the company?
I think as technology trends come and go, the mission stays the same, which is using that technology to better the lives of the people in this region. Think about the basic food groups, no pun intended, of life: entertainment, retail and consumption, payments, financial services, risk management, investing as a category, food as a category. That's a pretty big chunk of GDP right there. There's a few slices.
So the sky's the limit.
Well, I think the needs are there. The human needs are there for technology to be applied to solve basic problems. As long as that's there, Christine, we'll be working hard to try to solve those problems for people.
Thanks for talking to me, Nick.
My great pleasure.
And that was Nick Nash, Group President of C. Hope you've enjoyed the program. Do check us online at managingasia.cnbc.com for more exclusive leadership insights. Until next time, I'm Christine Tan. Thanks for watching.